This is a huge change in behavior, and it is a clear sign that the Fed is beginning to capitulate. And it leads us into what to expect as we head into the fourth quarter. After we pop into look at the charts a bit later, I'll provide the rationale for the expectations of a Russian-driven. This is a huge change in behavior, and it is a clear sign that the Fed is beginning to capitulate. And it leads us into what to expect as we head into the fourth quarter and why. After we pop into look at the charts a bit later, I'll provide the rationale for the expectations of a Russian-driven $3,500 gold price forecast to $3,516 per ounce.
In 2024, the price of gold has surged by almost 20%. Supported by large purchases from central banks, a rise in consumer demand, and heightened interest in safe haven assets amid geopolitical uncertainties. The global central banks recently reportedly added a net 37 tons to official reserves, representing a 206% month-over-month increase and the highest monthly total since January 2024, as per the IMF. China, Russia, India, and Turkey are the main contributors. The rapid increase in the gold reserves of emerging markets' central banks reflects a willingness to diversify away from the dollar, which still represents 2/3 of central banks' reserves globally. Andrew Maguire, with nearly 50 years of experience as an independent Loco London metals trader and analyst, reveals the hidden forces propelling gold prices to record highs and predicts even higher prices for the final quarter of the year. Maguire highlights a pivotal moment when the Federal Reserve attempted to suppress gold prices below $2,000. Only to be met with robust Asian physical demand. This miscalculation by the Fed triggered a powerful rally, leading to a $600 per ounce surge fueled by central bank gold shortages. Following the U.S. and European sanctions imposed after the annexation of Crimea in 2014, Russia began significant gold purchases. The proportion of the precious yellow metal in reserves increased from 10% in 2013 to 26% in 2023. Since 2013, Russia has been preparing for potential sanctions. The Russian Federation's gold reserves witnessed a significant increase by the end of August, reaching $188.8 billion. The Central Bank of Russia stated that the value of gold reserves rose by over $9 billion, or 5.1% since the beginning of August, bringing the total to $188.8 billion. Looking ahead to the fourth quarter, Andrew Maguire anticipates even more significant movements in gold prices. He points to Russia's decision to boost central bank gold reserves as a key driver in this shift. According to Maguire's sources, the Russian central bank expects gold prices to stabilize at around $3,500 per ounce following the launch of the BRICS currency. As we dive into the video, remember to subscribe and tap the bell icon so you never miss an update. We value your thoughts, so drop a comment below and give us a thumbs up if you enjoyed the content.
All of the historical drivers which basically had enabled the synthetic gold price suppression game for the entire tenure of the last 50 years, obviously COMEX market-centric history, have systematically run into the identified central bank physical buy levels that we've identified along the way, up from and this was really kind of where we drew major attention to it, was after the Fed's massive miscalculation in mid-February. We looked at it in the charts. We'll look at it a bit again in a little while, but which is when they tried to chart paint gold through $2,000 into very strong Asian physical buying. And that blew back. Commencing, really, that was where we saw the commencement of a over $600 per ounce rally into central bank-driven physical shortages, forcing the Fed to begin folding its spoof hand. Now, every other central bank, and first-tier bullion bank for that matter, is long gold for their own books and are continuing to buy gold into every single dip. Now, we've evidenced the Fed agent banks largely populated by the swap dealers, as we call them, the commercials. We've evidenced them short covering at the top of the current range. Now, obviously, short-term volatility aside, this is a huge change in behavior, and it is a clear sign that the Fed is beginning to capitulate. And it leads us into what to expect as we head into the fourth quarter and why. after we pop in to look at the charts a bit later, I'll provide the rationale for the expectations of a Russian-driven $3,500 gold price forecast. A decision was made by the Russian central bank to increase gold purchases. And if you recall, around the 15th of August, we noted the unusually high gold demand and premiums coming out of Russia, with our well-connected Russian-facing liquidity providers remarking that this likely related to the plan to increase central bank reserves ahead of the BRICS Kazan summit next month. Now, these premiums have continued, and we have fresh evidence Russia is trading gold for goods. Now, all the pieces of the puzzle are assembling, some of them as yet unreported. Now, one of the clues as to where the Russian central bank expects gold prices to settle around or shortly after the BRICS currency launch, who let out of the bag before anything was published, that based upon the cross rates between central bank rate of 21% and the huge rise in leasing demand, which pays 5.5%, a 5% coupon on their gold bonds, the price should be 10,000 rubles per gram, which as of today equates to $3,516 per ounce.
From October 22nd to 24th, 2024, a BRICS summit will be held, with a key agenda discussing the potential use of a gold-backed common currency. BRICS, a group of countries consisting of Brazil, Russia, India, China, and South Africa, has been an important player in the global economy since its formation. BRICS' de-dollarization initiative aims to reduce reliance on the dollar and create a more independent alternative for international transactions. Addressing concerns about the BRICS settlement currency, Maguire references his well-connected sources who have been accurate in predicting key developments, such as Sberbank digitizing physical gold earlier this year and subsequent testing of a commodity-backed currency. Maguire believes that central banks are nearing the point where they can use their excess FX reserves to purchase physical gold, preparing for a gold revaluation event. In fact, he argues that this global gold revaluation is already underway in a stealth manner. Now, let's delve into the video.
Let's look at where we are in this process. And as we know, Basel III NSFR standards, implemented on the 1st of January 2023, provided global central banks the mechanism to be able to revalue their physical gold reserves higher, from a 50% haircut to a fully cash exchangeable first-year asset at a time of their choosing. Now, we are approaching the point where central banks will be able to pay off massive swathes of debt by investing excess FX reserves into physical gold ahead of a gold revaluation event. In fact, the global gold revaluation event is already underway by stealth. Look at the prices, driven by BRICS central banks openly racing to back their currencies by purchasing gold to better participate in the non-dollar denominated BRICS-controlled stablecoin settlement process. Now, the depreciating fiat currencies that the BRICS members have been and continue to swap for gold are immediately wealth protected. And as the process rolls forward, as they buy gold, obviously, and as the process rolls forward, the gold is locked out of the fiat gold system, tightening supply and forcing the gold price to naturally rise, as benchmarked against all fiat currencies, that is. Now, while not one-to-one correlated, purchasing gold into a rising gold price also serves to bolster the individual foreign exchange values of the participating 60% component of this unit stablecoin. This is the polar opposite of current dollar debasement. I mean, good God, in interest on naked short of gold debt, and we'll call it naked short of gold US debt, has now ballooned to $1 trillion and growing. It's staggering to even think about. But really, to answer the subscriber's question more fully, the decentralized BRICS Enbridge settlement currency being actually fit for purpose, or even that it'll be tabled at the Kazan meeting in October. However, our extremely well-connected contacts who have been accurate every single step of the way, from Sberbank digitizing physical gold on the first trading day of January 2023, followed by last year's beta testing of Glaziev's commodity currency, which later this year was affirmed after Glaziev's meeting with Russian Central Bank Governor Elvira Nabiullina, greenlighting the BRICS-backed stablecoin. Now, while we have seen attempts by the US to divide the Sino-Russia alliance, we now weigh in some actually serious geopolitical sanction escalations, indicating this fungible, decentralized stablecoin settlement token, reiterate, fungible, decentralized stablecoin settlement token, we formally launched in Kazan in preparation for the launch of the BIS-sanctioned M-Bridge platform, the unit. This is a BIS-backed platform. Really, what's happened is every central bank, bar the Fed, has been loading up on as much physical gold as possible ahead of this. By stealth, the revaluation process is most definitely already underway with a minimum target of $3,000. Now, the misconception that the BRICS currency is not fit for purpose arises from a lack of understanding on how an asset-backed stablecoin token actually functions. The intrinsic value of each unit token always remains proportional to the total value of the unit reserve basket measured in gold, and as a result is expected to remain less volatile than the value of any of the components or other components of the basket.
The gold standard, implemented during the late 1800s and early 1900s, required countries to peg the value of their paper currency to gold by establishing a fixed exchange rate between their currency and a specific amount of gold. Since 2010, central banks have amassed 7,800 tons of gold, with over a quarter of these purchases made in the last 2 years, predominantly by emerging markets. China, the largest buyer, has significantly contributed to this trend. As we approach the fourth quarter of the year, the recent gold bull market has prompted analysts to explore the possibility of even higher prices. Some speculate that gold could surpass $3,000 by 2025, driven by factors such as economic uncertainty and strong central bank demand. Do you believe the gold price could surpass $3,000 by 2025? And what specific events or policies could catalyze this growth? Drop your comments below and let us know what you think. If you found this video helpful, please like it and subscribe for more. We're grateful to have you with us on this journey.